Welcome back to Macroscope. In this video, we'll break down the most important macroeconomic data released last week across the US, UK, Eurozone, Japan, and China. We'll explore inflation, employment, and business activity trends, and what they signal for the global economy and markets. Let's dive in. This week's highlights: United States. Strong services and labor data contrast with weak housing and manufacturing, reinforcing a higher-for-longer Fed outlook. Euro area, including Germany and France. Services continue modest expansion, but weakening manufacturing and confidence data keep the ECB cautious despite holding rates. Asia, Japan. Japan shows a split economy as services remain resilient, but manufacturing slips back into contraction, with the BOJ staying silent, starting with PMI and business activity data. This was PMI week, and the story was one of divergence. US services are booming, but Japan and parts of Europe showed cracks. Japan. Manufacturing PMI slipped into contraction at 48.8, below the 50.2 forecast. Services PMI surprised to the upside at 53.5, jumping from 51.7. Japanese manufacturing is struggling, but services continue to expand, likely supported by domestic demand and tourism. Europe, Eurozone manufacturing. PMI, 49.8, slightly above forecast, still contractionary. Services, PMI, 51.2, improving again, the third straight expansion print. Germany and France remained mixed, with Germany's composite PMI slipping and France holding steady. United States S&P Global Services PMI, flash, 55.2 versus 53 expected, a strong beat. Manufacturing PMI disappointed at 49.5 versus 52.6 forecast. Composite PMI surged to 54.6, signaling broad-based expansion. So the takeaways are the US economy is outperforming on services, while manufacturing globally is softening. That divergence may drive sector rotation in equities. Next, onto employment. Just one key release, but it continues the trend of a resilient US labor market. Initial jobless claims fell to 217,000, beating the expected 227,000, and improving from last week's 221,000. Conclusion: the US labor market remains strong. This reduces urgency for the Fed to cut rates. Up next is consumer trends and confidence, Eurozone. Consumer confidence flash improved slightly to negative 14.7, better than expected, and up from negative 15.3. In Germany, GfK consumer confidence worsened to negative 21.5, missing forecasts and marking a reversal of last month's slight improvement. France's business confidence held steady at 96, in line with forecasts but below previous 97. Durable goods orders in the US came in better than feared at negative 9.3% versus minus 10.8% forecast, after a massive spike of plus 16.5% last month. So takeaway is European consumers are still cautious, and in Germany, sentiment is falling again. That could weigh on Q3 retail and services activity. This week, all eyes were on the European Central Bank. The ECB held rates steady. Deposit facility rate, 2% main rate, 2.15%. The ECB press conference emphasized data dependence, with Lagarde citing mixed signals, weakening industry, resilient services, and subdued inflation expectations. Market interpretation: no rate cut now, but one could come in the fall if inflation softens and growth falters. Let's summarize the global picture. Zooming out, here's what the latest data tells us. Jobs. The US initial jobless claims declined. Consumer and business confidence. Confidence remains subdued in Germany and France. So what are some of the implications of last week's data, and as a macroeconomic investor, how could you play this? Divergence between services and manufacturing. Implication: services sectors in the US and Euro area are expanding, while manufacturing is broadly contracting, especially in Japan and parts of Europe. Macro play: long services exposed equities, e.g., consumer discretionary, travel, tech platforms. Short industrial or cyclical sectors in Europe or Japan. Use relative value equity or sector ETFs to express the divergence, e.g., long US services versus short EU industrials. C. Subscribe for more macro updates and drop your questions below. Thanks for watching, stay informed, and see you next week.